Hey everyone, and welcome to the channel. My name is Dennis, and today we're going to be talking about my dividend investing portfolio, nicely named Dividend Dennis. Now, we're going to be looking and seeing how the portfolio performed so far this week, as well as some other things when it comes to individual stocks and how we're doing. Now, what we're going to do is talk about the portfolio on M1 Finance. It's what I mainly use for investing into dividends. You could check out the link down below if you want to sign up for M1 Finance. It's a great platform to get started with, and then you can go ahead and kind of get money started in and rolling in to be able to grow over time. Now, also down in the show notes below, I will have a link to Earnest, which is a student loan refinance company. If you have high interest rates on your student loans, check them out. They can actually help lower them entirely for free if you qualify, as well as get a nice little bonus and support up the channel. So let's go ahead and get started here and see where we're sitting at. So currently you can see right over here, my value for my portfolio is sitting at $16,129.41. If that seems like a really high number for you, don't worry. I actually started off with $100 in this portfolio, and I will show you guys that in just a moment. So as of today, we had a really good day in the market. We had a gain of $365.44. So that's a nice increase right there. Now, the really cool thing is if we actually take a look here, let's go to the week here. So over the last week, we have gained over $1,137.81. And then we go back to the month, we actually have gained $483. So part of the reason for that is you can kind of see on this chart here, we had a dip and then we're coming back up. So this is a really good reason to kind of explain to people why, if you're in it for the long term, you just stick to the market. You try not to time the market, whether it's buying, selling, or, a combination of both, because if you're in it for the long term, it's going to do very well for you. So over the last quarter, you can see we're up $1,233. And then if we go to our 1 year, we're up $2,312.95. And our last tab over here, which then I'll show you guys afterwards, we're at a total of $2,372.35. Now, this is money weighted returns, which just means that if I sold a company for a profit but kept the money in my account, that is still going to be indicated right over here, which I personally love. And I'll show you guys what my unrealized gains are currently, which are a total of $1,872, which is up 13%. So just in case somebody wanted to see this number, that's where I'm currently at right now. And then you can see here, like I mentioned, I started off this portfolio back, I think it was January 23rd, 2019 with about $100. And for the first couple of months, I just put a little bit every single week, whatever I could, around $10, $20. And then I kept bumping that up as I started to feel more comfortable, got a better understanding of the investing and the portfolio and what I wanted to have in my account as a whole. And then as I kept going, I started to increase my amount every single week. As the market started dipping back in February and March, I really started to amp up how much I was putting in. And throughout those next couple of months, you can just see here, I just kept investing time over time. Even when the market was dropping, I was investing. When the market was going up, I was investing. So you could see here over time, you could just see all these nice ups and downs. But over the course of these last few months, it has just consistently gone up. We had a pretty big dip in the end of October, but here in the first couple of weeks of November so far, we have seen some really good growth. There was big news from Pfizer about some vaccines that were coming out. So I don't want to get too deep into that, but that has of course helped over the last day when it comes to these performances that you can see right up here, which was at $310. It was a little higher earlier in the day, but it has dipped down, which is fine. We're again in this for the long term. So whatever happens today is not as big of a deal as what happens over the next 5, 10, 20 years as far as what we're trying to accomplish with this portfolio, which since we are, focused on dividends as a portion of our portfolio, I have a goal of trying to get over $1,000 a month in dividends. Now, that's not my only focus. I do have growth stocks as well too, and we'll kind of get into that here as well. So what we're going to do is kind of take a look at all of our slices and see how we're doing across the board. Let me switch to my all tab on these little slices here so we can kind of get a better idea of what's performing well, maybe what's not performing as well, and some of the decisions we might make based off of this information, because we always want to be paying attention to our stocks. Setting and forgetting is okay, nothing wrong with that, but we still want to be, attentive to what's going on in the portfolio. I personally like to look on a daily basis to see how, this whole thing is doing. Seeing this right here makes me happy because I'm over 16,000, but for somebody who doesn't look all the time, maybe that's not as big of a deal for them. So what we're going to do here is we're going to take a look. Let me clear that up there. So of course we have our tech pie right over here. So our tech is our biggest position that we have as far as percentage. It is targeted for 26%. You can see right over here, it's gained over $416. We're not going to worry about this percentage here, so just ignore that. We're just going to worry about the actual dollar amounts in these regards. So next up, we have our growth stock right over here. So this one is targeted for 15% of our portfolio, and it has gained us $387 thus far. Our financials right over here, we have it targeted for 10%. We have gained already over $538.91. So as far as the dollar amount in our all tab, this right now is considered our best performing slice. Is that going to always be the case? Probably not. I think that the financial stuff is going to kind of teeter off a little bit on their growth. I just had some really good stocks that I ended up buying into at a great price point. And I can break into that here in just a little bit, so make sure you are sticking around. Speaking of sticking around, make sure you guys hit that subscribe button down below. I don't know what that was supposed to be. Hit that subscribe button down below. You can hit the like button if you guys like too. That does help out support the channel there. Let me go ahead and erase this right here. Right there. So next up is going to be our Vanguard fund. So with Vanguard, let me click back on here. So Vanguard, we have this as 10% of our portfolio, effectively making this the largest position we have in the fund altogether. Now, for this, the reason it's the largest is because this is its own, where in our tech pie up here, this has 3 different funds split between that 26%. So that doesn't necessarily mean any of those are higher than the Vanguard by itself. Now, this one is the VOOG, which is more focused on the growth fund for the S&P, which is around the top 250, give or take, stocks in that S&P 500. So right now, the reason this looks really low at $37 is because I actually switched over from VOO to VOOG, effectively showing that it hasn't had a lot of growth, because when I did that transition, the market was kind of in like a standstill for the most part for like 2-3 months. So then next up here, we're going to see our retail right over here. Focus is 10% target, and then we have gained $336.55. So pretty stellar in that department. Our real estate right over here is targeted for 9%, and we have a total gain of $91.71. This has actually recently gone down in my target. I didn't want it to have too much in my portfolio, but also not too little. So over time, I've been kind of lowering this. While in case the stock and slices that have been going up, one of them has been the industry and energy sector. I do have them mixed together because M1 Finance allows me to make whatever pies I want. So right over here, this is targeted for 9%. I just moved this up while moving the real estate down. So this over time will have more in here. So this is sitting at $130.45. And then we can see here our health currently is sitting at a 5%, which is currently over its target, and that's okay. And part of that is from what happened over the last day, and I'll go into this sector as well. But we're up 75.09. And then our last one here is our consumer products, and we can see here target is 6%, and we are currently at $126.87. So if we break down a little bit deeper into some of these, the biggest thing right now is with Pfizer. So if we go into our health, we can see here in our all-time, it's 33.18 is what I've gotten back from Pfizer. But if I go over to the last day, 1904 was over the last day, and that's because Pfizer has announced that they do have some vaccines for that virus. So there's a lot of all the stocks pretty much that were stocks from like AMC to all these different companies that have been like really on a downward trajectory because of COVID and the whole situation of things not being available for consumers to go to, like concerts and stuff like that. A lot of these companies are starting to go back up in the positive direction, so hopefully that continues long term. I don't foresee it to be something that it's consistently going up, but I think it's going to be over time just constantly going in the right direction that we want it to be. So that's really nice. I only own 6 shares of Pfizer. So, my gain today, if I sold, obviously, would be 1904. So not a ton. Obviously, this is one of those situations where you're like, well, I really wish that I had more shares in this company, so I could have gotten those even higher gains. Obviously, we didn't know what was going to happen. That's the whole thing with the market. Sometimes you can foresee some things happening, but that's never a guarantee. So you always want to be cautious with, how much you're putting in based off of the percentage of your portfolio. Health is one of the lowest sectors in my portfolio. So I didn't want to overdo it. I know obviously healthcare is going to be important long term, but I also wanted to be cautious with where all my money was going. So I only had the 6 shares, which is not bad. It's better than having 0 shares. And the nice thing is I was buying these in small increments because M1 Finance allows me to do those fractional shares. So let me show you here in my activities feed. I'm going to go to just showing you what Pfizer had. There we go. So if I just go into Pfizer, you're going to see here, like back on September 8th, I bought more at $17. September 4th, I tossed in 5. Back in July, I did a couple deposits. You could see $10 across the board here, 15 here. So what this is really just showing you is that over time, I'm just slowly putting in a little bit at a time to be able to get those, fractional shares buying into the company. Because, for example, like right over here on June 16th, just going in, I bought this at $33.06 a share. But because I only put in $8.56, I got almost a quarter of a share. So it's not a lot of money that's going in. It's not a lot of a share going in, but it's still enough that when the market is going up, I am still gaining value on the shares, even if it's not a full share just yet, or if I have, fractional pieces of shares across the board. So that's one thing I love about fractional shares. For somebody like myself who got started with $100 and didn't have a lot of money to invest with at the time, I was able to really kind of get this going. I'm even going on to the next page here. So you can see all of these. I mean, if I go back to the very beginning with Pfizer, so I started buying Pfizer back in August 28th of 2019. My very first deposit here, you can see, was $3.49, and the share price was $34.97. So this bought me about 10% of a share. Not a lot, but if I didn't get started with that, I probably wouldn't be in a position where I had 6 shares where everything was going up in that whole process. So, that's one thing, like I tell people all the time, is just making sure that if you can't put in a lot, that's okay. But as long as you're putting in, putting money in, if you're somebody who's long-term like myself, the big thing as well too is making sure that you are staying consistent, constantly investing every single week. Because, whether the market's going up or down, you are still putting money in. And if you're in it for the long term, it doesn't matter what happens today or tomorrow. It all matters on what happens over the course of time. And you could see this chart right over here, like it's just going up over time. Granted, obviously, a lot of that is my own money. But when you can see here that over $2,200 is money that I had gained, whether I sold all my money now or, some of the money that I sold or some of the money I got in profit from companies that I sold over the course of this time, are all in this together. So for me, that's a big deal because I want to make sure that I am sticking to it to get those dividends, which of course, since this is a dividend, portfolio, let's actually take a quick look and see how our dividends are doing. So if we just cut it down to just dividends, I did a dividend, total that we made for October a little while ago. You can always, backlog onto some of my old content. So you'll see, these 3 dividends. You'll see AT&T right here for $13.10. But you can see all of these different dividends I get from companies that I have. So it's really nice to just kind of see this money increasing. And, nowadays getting something for $13.10 is pretty fantastic when I consider the fact that, let me switch back to the very first dividend I got, which was March 14th, 2019. I got 2 cents, I should say, from Microsoft. So, starting with 2 cents is really nothing. You can see most of these are just a couple pennies here and there. There's 3 cents there. There's a nickel. There's 6 cents, 2, 5. Some of these companies I don't own anymore, but what this is really showing is that like over time, as I'm putting more money in, all of a sudden I'm starting to get, $7, $2.47, $1.95, $2.18, all these different, like $2.09. Like that's good money coming in that I can utilize to reinvest in my portfolio. And that's my goal. That's my focus, is reinvesting that money into the portfolio. So that way down the road, I can utilize that money for other things if I wanted to, or consistently reinvest that money too. You saw that my very first dividend was Microsoft back in March of 2019. This is September of 2020, so about a year and a half later, and now I earn $2.20 from my dividends with the company, which is a massive increase from what I got my very first time. But I also gained growth on the stock as well too, so not just the dividends. And earlier I mentioned that we were going to talk about not just my dividend stocks, but also my growth stocks. So let's take a quick look here and see right here. So this is my growth slice over here. Like I said, it's 15% of my portfolio. So let's take a look. I have 4 different companies. I got Tesla right over here. I got Amazon, I got Google, and I also have Facebook. So this is turned to the alt tab right over here. So we can see here that Tesla, of course, has brought in the most as far as gains at $228. Amazon is at $19.33. Google's at $83.55, and Facebook is at $46.93. Now, I bought all these at the same time, so this is all relative to the exact time frame of when I bought them to, our current time frame right now. So, some of these have had ups and downs as of recently, and I was, again, buying whether the market was up or down. I try to be a little strategic too, right? So if, for example, Tesla is up immensely, and let's say at one point, I think it was like Google that was down pretty bad, I'll actually decide to put more into Google versus doing more into Google right over here versus doing more into Tesla, because my money is going to go further if it's down a lot more, or if I see potential in the future for this one to gain a lot more as well. So let's see if it shows us here. Last quarter. So right over here, you can see in the last month, Amazon has gone down quite a bit in comparison to everything else in this portfolio. So here I might make the decision to say Amazon might be the one I want to put in more because it's gone down a little bit more versus Google has been up lately. So for me, I think my money can go further for Amazon. But I, of course, try to keep them within their target ranges just so that way it's not too heavily weighted on one side or the other. So it's just all a matter of the decisions that I would try to make based upon how everything is doing. And that's one of the things I love about M1 Finance as well too, is when something is well over their target, I try to look at how they're performing. And if they're performing really, really, really well in comparison to some of the other stocks in that slice, I look at those other stocks and say, okay, is it time for me to buy more into them versus the main one? And I'll show you another example here. So right now, let's go into my industries and energy. So I have 3 stocks right over here. So I have NEE, which is Next Era Energy, have ADP, and I have Lockheed Martin. Now, if I set this to my all-time right over here, you're going to see something very noticeable. First and foremost is going to be Lockheed Martin. I'm actually still down $4.57 from them. ADP, I'm up $77.37. NEE, I'm up $8.45. This is a newer stock too, so this number isn't reflective of these ones as far as when I bought it and how it's doing right now. But one thing is with Lockheed Martin, I've owned them for quite some time now, and they are currently down. So if I click on here, and you can see here, so my average share price of this company is $373.07. Even though I don't own a full share, what that's just meaning is every time I buy into the market, this is going to be the average price I've paid. Obviously, some higher, some lower, just a matter of when I bought into it. The current price right now is $366.03. And so what that's telling me is if I buy right now into this stock, this average price is going to go down. Maybe not by a lot, but it is going to go down just because I'm paying less for the stock than I did on average. And so that means even though I've owned them for quite some time, that right now they are actually doing less than I did when I first originally bought them. And that could be scary for a lot of people. Sometimes that'll cause people to want to sell because they're like, well, if it's cheaper than when I paid for it, it's not worth it anymore. It might, the company might be going down. And I mean, that could be true. But what that also means is that you might have an opportunity. If you believe in the company, if you think the company is going to go far long term, this might be an amazing opportunity to what they call dollar cost average, or you'll typically hear them say DCA, which stands for dollar cost average. And so that means is I'm going to buy more and I'm going to save more because I'm paying less than I was originally for the same company and the shares that I'm trying to buy into. And the nice thing is if this company comes back and it continues to grow, I just got more benefit from this company than before. So let's clear that up and let's go back to the industries and energy page here. So this is the way I decide to do things. If I'm going to be depositing money into this sector in this slice, which is the industries and energy place, I'm going to make a decision and say, okay, do I want to put, actually, let's go to the last month as an example here, or even last month. So when I look at this, I'm saying, okay, well, out of all three of these companies, one of them has been in the positive over the last month, and two of them have actually been in the negative. Now, it just, again, depends on the news and what's going on, but I might decide that if I'm going to put money into this, pie over here, that I might actually go ahead and put more of it into Lockheed Martin than I would into ADP, or maybe not put anything into ADP right now, because Lockheed Martin has more opportunity for me, unless there's maybe some big news that I suspect coming out for ADP that'll cause it to go even higher than it is currently, which at the moment I don't see that happening. So I would be putting more into Lockheed Martin, giving me more opportunity because ADP is already on an upward trajectory right over here without me adding a lot of money into it. So why would I keep adding more when my bigger opportunity is Lockheed Martin, which has been down over, the last month over here, and I can buy more, lowering my average share price, which will then, when the stock goes back up, hopefully obviously goes back up, then I will have gotten all those additional gains on that fund. Now, those are decisions you have to make. I think a lot of people make the decision to buy more so when a stock is going up, and that's not necessarily a bad thing. If a stock consistently is going up and you're buying at a certain point and it continues to go up, that's obviously a great sign for you. But for me, I like to buy a majority of my stocks during my, my weekly purchasing, which is on Mondays. I like to actually have my money going into stocks that are kind of down in my portfolio, because a lot of stocks, especially if you're somebody who's getting more into individual stocks like I have, you're going to see I have 28 positions, one of which, of course, is that ETF. But you're going to see a lot of times what ends up happening is that you're going to have a majority of your stocks in the positive. Let's actually do this really quick. So you're going to see here, I have all these stocks in the positive right here, and then you're going to have some stocks that are in the negative. So I have only 3 stocks that are currently in the negative. But here's the funny thing. One, AT&T has been kind of in the negative for a long time, so that's a little tough right there. But this company right here, DLR, they're currently unrealized right now, actually down almost 3% on my portfolio, which is $9.46. But this company was at one point doing really, really well and was way up. I think I was actually up almost like 15-20% on this stock. And then the market for this one goes down. And then it comes back up. And it goes back down and it comes back up. So for me, now is a better time to buy in, because when I'm buying in, I'm getting the stock for a cheaper price than when the stock is at its all-time high and I'm paying it at a premium, and then the stock goes back down. Then I'm actually in this position where I have unrealized negative gains. Lockheed Martin, same thing, down almost 2.21% right now as unrealized, which means that if I'm buying now, I'm getting the stock for a cheaper price. And you can see some of these other stocks right over here that are low percentages that aren't really doing as well, ideally for me, versus, let me go here. You're going to see this with like Discover Financials. You look at this right here, unrealized gains. This is 87.94% gain. Ally right over here, 62%, Tesla, 35%. So these companies, if I buy into Discover, let me go into their actual slice right over here. So I go into the financials here and I look at my Discover stock. This stock is doing amazingly well, right? So currently the stock is at $76.17 a share. I have on average paid $40.57, which means I have 7.21 shares, I should say. And that means every single time I buy more into this stock, my average is going to go up quite a bit because of how big the difference is between what I originally paid and what the stock price is now. And so that's a little tough sometimes, right? To make that decision of like, okay, do I see this company consistently going up, or are they going to hit maybe a little bit of a downtrend for a short time? Then I can buy into them and then make that decision to get them at a cheaper price versus, if I look in my financial sector, and if I was going to be buying more into them, all of my financials are doing pretty well, except for, I would say, Visa has been growing the least in the last month. So maybe if I were to be investing in this sector, which is my financials, I might want to buy more into Visa right now because they have grown less over time versus some of the other stocks. And so those are the decisions that I make based off of what I'm trying to achieve, which is long-term growth across the board. So I like to buy things when they're kind of on their down, just because these 28 companies that I have, if I go back over here, you can kind of see what all of these are. If I go, if I believe in these companies for the majority and I see them on a downward trend for a little while, those for me are buying opportunities to be able to take advantage of things like Costco, Johnson & Johnson when they're maybe not at their best, or AbbVie. But when companies are doing very well, I tend to hold off on buying more just because the opportunity is not there for me as much as it was before. And here's a great example. So Apple has kind of gone up and down over the last little while. Let me close that. So they've kind of gone up and down. And so what I was doing with Apple, if I go over here, I'm going to show you here. Let me type in Apple. And right over here, you can see I was doing a lot of buying with Apple, like larger dollar amounts than before. So $40, $33, $100, $25. And the reason for that is because after their stock split, they actually hit a really nice peak, but then we're starting to come down for a really good amount of time. And what that means for me was, obviously we know where their 52-week high was at this point. And I believe at some point the company is going to get back there. So for me, I would rather start investing more when they're down, knowing that, the company is going to keep moving forward and keep innovating and keep growing. And, it's still one of the biggest companies in the world. So why not buy them when they're down and get more value out of it? So now if we go into here, let me see. So you can see right over here. So my overall tech has not been doing great. But over the last month, Apple's only gained for me, $5.23, in comparison to some of those other companies in the last month have been doing much better. So you can see here, I own 14 shares of Apple at an average share price of $101.86. They're currently trading for $116. So right now, if I buy, of course, my average share price will go up, but I still think this is a better shot for me long-term versus where their 52-week high was. So even right now, I still think that this is a better process to be buying more into Apple for myself, because that's how I have my portfolio set up. And of course, everyone's different. So make sure you are always doing your own research when it comes to which stock to buy, which one's going to work well for you, because maybe some investors, Apple's not the best stock for them to have in their portfolio. And for many others, Apple's a fantastic stock to have, in there. I know a lot of people are kind of wishy-washy when it comes to AT&T right now, as an example. For me, I own 28 shares. Haven't bought more of it in a little while just because I already own enough that keeps my average share price under $30. Obviously, right now they're at 28.28, which means if I were to buy more into their company, my average actually would go down, but I just am looking at other opportunities to buy. But to some investors, AT&T would be a terrible investment in their portfolio because this is only focused on dividends for the most part and not growth. But I have a little bit of both. I have growth and I have dividends because I do like both. And for me, dividends do give me an excitement level that when I earn them, I'm getting money coming in. I see where my focus is and my future is when it comes to getting that $1,000. So like if I go into my all tab here, right now as earned dividends, which just means that these are dividends that have either already gotten paid out or I passed the ownership date or the payout date that I needed for them to actually come into my account, regardless if they've actually been deposited yet or not, has been $148.56. Obviously, not a lot in this whole scheme of things. I've gotten more on my market gains than my dividends, but I'm kind of like doing a little balance act between the two. So hopefully long term, I can get to that point where I am, getting those dividends, getting that growth. You could even see here, since we've been talking, the market has been going down. So I actually went back underneath 16,000, which is a little sad because I did like hitting that new threshold. 16,000 was brand new for me. But I'll still take the gains that we had today. Let me see if I can jump back over here. Where are we at today? So the gains are still $142.46. So not terrible. And I suspect over time we'll hopefully continue to see these go up and higher. Here's a great example from what I was just talking about. So we have stocks like in the health, obviously with Pfizer. Pfizer's up 7.55%. So for me, I wouldn't be as excited to put in money into that stock versus if we look here in my growth, right over here, we have Amazon down almost 5.11%. So for me, if I were depositing more money for tomorrow's, investment, I would probably want more going into Amazon and Facebook, because these are down heavily today versus something like Pfizer or, a couple other companies that are doing very, very well. Like let's go into the financials. Like look at this, Discover, Ally, all these companies are doing really well today. Aflac, all doing very, very well. I'm not as excited to put money into the ones that are doing well. I'm excited to put the ones that are doing a little bit less in performance, because then my money can grow, knowing that I believe in these companies long term and I see, me holding them for a very, very long time. So that's kind of like my method. That's my process when it comes to wanting to invest in certain companies during a certain time in my portfolio versus investing in other ones, because I want to get the most value that I can from my portfolio so I can continue to see it grow higher and higher every single week, every single month, every single quarter, and every single year for that matter as well. So if you want to follow along, make sure you have that subscribe button hit down below so you guys can follow along. And then also too, you can check out my next video right over here. My name is Dennis, and I'll see you in that next video.